Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, yesterday was, I think the fear, I mean, listen, crazy things have been going on in the market, right? So it's not like there wasn't fear already there, but yesterday we finally saw like some real panic and flight to safety into treasuries. In large part because the jobs number was really, really bad. So, I guess we'll talk about it here in a second. Let's go to the charts and we'll see. So remember that they had just released the news and I was looking at it volatility and saying, well, maybe we could get to 02. Isn't it a little curious that the point of control for yesterday was right there at that volatility level? Granted, they did not close at that level either. So, like, should have been more volume there. So that's actually, you don't like to look at point of controls because it usually just shows you where the pit close was. But in this instance, they really, really cared about that volatility level. Interesting, but they went well beyond that and much further overnight. So yeah, some big shifts there. S&P 500 took a pretty good dive yesterday, although most of it was in the overnight, but they sold into the close. I'm always a little concerned when there's selling into the close, okay? What happens at the close, like whether there's buying or selling, can matter because there is a lot of these market on close orders. So it's selling into the close kind of suggests that a lot of really big funds were selling stuff. But it looks like we've made a decent recovery in the overnight session here in the S&P. Oil kind of going along. I think that to some extent this concern about growth has hit oil. But, things are still going with Iran. Besant yesterday was saying that he's seen the leaders of Iran pull massive amounts of money out of Iran. So there is some real concern that if the negotiations that are supposed to happen today either don't happen or don't go well, that there could be conflict in Iran. So, and we got gold and silver. Well, silver took a little bit of a hit yesterday, but it looks like they've recovered most of it. Silver, though, is still hurting. Okay. Now, in silver, well, let me tell you about this in a second. Copper also taking the hit yesterday. That's actually significant there. And then the Japanese yen maybe kind of slowing down. They have an election this weekend. It's going to be big. So, and then Bitcoin. Oh my goodness. Bitcoin really pooped the bed. They just got slaughtered right to 60K, but then it bounced. By the way, somebody was saying, I saw on Twitter that like the historical drawdown in Bitcoin is like 30K or something. It takes us down to 30K. That's wild. So the thing I was going to say on silver is that there is a story going around and picking up traction in social media now that there has a whale in silver that has been short for some time. It had built a really large short position, and I think that they had maybe been losing on that short position too. And the Chinese authorities, or I don't know if it was the authorities or if it was just the rules, But basically, he is not allowed to add to his short for a month. So basically, retail traders have a whole month that they can try and buy silver up and squeeze this guy out of his position, because he can't really do anything to fight back. That seems like a potentially wild situation. I don't think that it's picked up enough traction that like enough people are seeing that as like a short squeeze opportunity, and the silver price is still down this morning. But if we start to see silver pick up next week, that could turn into something truly historic. Like if they really squeezed silver, it would make GameStop look like a blip, you know? So I wanted to highlight that one because that could become a big deal in a couple of days. All right. Now, in the treasuries here, we were getting close to 4.3. So that was a 10 basis point move yesterday. That's a big move. Okay. So this change in the treasuries is significant. Okay. If you go a little bit further back, it was really this decline right here. I have always felt that this decline that we had at the beginning of January, it just never set well with me. It was like, well, this is an example of the market's not completely informationally efficient, I guess. But I think that it was more than that yesterday, and I'm kind of wondering now, because the big thing that happened yesterday was Anthropic released Claude 4.6 Opus model, I think it was. And it's well, there's a couple of things in it that were unique. One of them is that it uses like a bunch of subagents. Like it can manage. It's an agent that can manage subagents, which is something that other people have been doing, but not with the Frontier models. And if they've trained it from the ground up like that, that could potentially be useful. I don't know. It's kind of weird for me to think about because with Claude, I have not really had issues with him. I just use the cheap model at work, and he usually gets it done. What I need, at least. But I know what I'm doing. I can prompt it better. I can do code on my own. I can modify things pretty quickly. So I don't necessarily need the higher level model anyways. I think that it might be useful. Something that I really do want to do next project here is try and get something where I web scrape a bunch of proprietary sources in the morning and then use that to try and create a report more in our style that would be like, here are the expected flows for the day, sort of a thing. And yeah, pass it into, you know, Claude 4.6 and see what we get out. That could potentially be like really cool, right? There's a couple of other projects that we got to get out of the way first. Which, by the way, Uzi, did you use the new version and haven't had any problems with it? Because I didn't hear anything. So I assume that means it's going well, right? I did get, that's interesting. I did get this, that's 502, so that kind of suggests to me that it didn't scrape correctly. There we go. Oh, because I didn't restart it. 8.19. It's been a busy week, and I don't want to risk causing a platform. Yeah, that's true. That's a good smart man. By the way, we should reload our levels. That might help a little bit. I'm a little torn about today because, well, we're starting out at the extended session -1, right? Open is quite a ways up there. Jeez. I don't know what price was actually the open, but wow. I do feel like that there's going to be some action today is the thing. I do think there's going to be some action today, and but I'm not really seeing for us in the treasuries a clear path forward for a trade unless we get a headline here. Let's see here. We don't have, so we were going to have non-farms payrolls today. That has been pushed back to Wednesday, by the way. Looks like the dollar is... The Japanese yen is on the move. The dollar is on the move. Other markets don't seem to be responding yet. And then the Bitcoin, as we mentioned earlier, seems to be on the mend. So that sell-off in Bitcoin yesterday was pretty wild. It was pretty wild. Apparently, like Donald Trump's crypto company, whatever, which everybody keeps saying is just Barron Trump, sold yesterday, which I'm quite shocked by. Was that like, we just can't hold this? I don't know, because it seems like you haven't had it very long. You bought the high. Like, why would you sell? I don't know. I think if you're in crypto, right, that the move is to hold it and try and weather the storm if you can, right? Because I have a suspicion that it's going to go lower. Like I was saying earlier, the average drawdown in the Bitcoin bear market would take us to like the 30Ks. Okay. But then if you wait, within 5 years, I bet you they probably have a new all-time high. I shouldn't say things like that, because if that's like the end of Bitcoin and then I missed it, I mean, I don't like Bitcoin. I'd like to see it go away. But geez. Now, on the other hand, if Michael Saylor becomes a forced seller, which, I mean, that company is being put under pressure. If Michael Saylor became a forced seller, Bitcoin could literally go to zero. I mean it. I think it could literally go to zero. I'm not seeing like a clear imbalance in the treasuries or anything. I'd say level 2 activity is about average for a Friday where we don't really have news. But there are some icebergs like that tick down. They just traded 4K. And before that, they traded 5K on the other side. So there is some activity here in the treasuries. I think it could be a little deceptive. The level 2 activity is average, but we're trading large icebergs. This is what Dan Pena said. Wait, what? That name is so familiar, and I'm not sure who that is. American businessman. Wait, is this the... even kind of looks vaguely familiar, but I don't know where he's from. Oh yeah, this is the guy that like talks about on social media about investing in commercial real estate. Yeah. I don't know if I don't know enough about him to say that his advice would be worth anything or not. But did he say if Michael Saylor was a forced seller that Bitcoin could go to zero? Like it seems to me, honestly, it seems to me that this entire run in Bitcoin can be attributed to Michael Saylor. I really honestly think that. When you go and you look at like search activity and retail interest and things like that, it just like regular people are not getting in it this time. They all tried it post-COVID, a lot of them with Dogecoin, and they got burned, and now they're just not interested. Is what it seems to me. If you know who created it, then you know that Bitcoin's going to zero. Yeah, like he knows. Come on, like he knows. Okay, so yesterday we brought this up, and I kind of got distracted by other things, but I find this so interesting, and I know I've talked about this before too. But I found it really fascinating. I think it was on HBO Max. There was a documentary released about Bitcoin and Satoshi that their marketing basically was claiming that they know who Satoshi is. Okay. Which of course was all like just marketing. They didn't have definitive proof about who Satoshi was. But I thought well, so first of all, if you're interested in cryptocurrencies and you haven't seen that documentary, I would really strongly recommend watching it. Even if you're like me and you hate it. Because the guy, but most of the documentary is interviewing the Blockstream guys. Basically, like the Bitcoin Core, the group of like 5 or 6 guys that have kind of been guiding the development of Bitcoin in Satoshi's absence. So you get to see like their attitudes, the things that they care about, things like that. These guys were, during the documentary, basically all in on chilling to countries to create strategic Bitcoin reserves, trying to get countries to buy Bitcoin. That was their whole focus. And they were putting lots of money into it too. They're putting lots of money into it. But they have this theory. There's this guy that is on the team that just kind of like came out of nowhere. And he doesn't seem to have like experience in line with like, why would you bring him into the team? Things like that. And they look at all of these other things. And they basically have a theory, something that I remember seeing when Bitcoin first came out. Like I remember the day it was released. I remember reading on Dig or Reddit or whatever it was at the time, and people arguing about it and thinking, well, I bet you it goes up, but I don't know when to buy it. or what to do with it, because at the time I didn't understand those things. If I could go back, I probably would buy it, and not just because of in retrospect, but because I probably would say, yeah, it probably will go up. Although no way that I would have thought that it would go up as far as it has, right? But one of the things I remember people saying back then was that there was strange things about the code. Do you not use footprints or volume profile? Not a lot. The thing that I remember people saying in the beginning is that, like, the code didn't seem to be written by a coder. Like, it was really brilliant code, but there was just like all sorts of common programmer conventions and things like that, that it was like somebody that wasn't a programmer or was like a child or something like that. And so this documentary's theory is that Satoshi was actually a teenager, was actually in high school. He had watched these other security researchers put stuff out, and he took that and made it into a coin and copied their stuff and, you know, made the white paper and all of that and put it out. And that's and that it was that guy that got put on Blockstream that was kind of like, huh. And they even had some interesting interactions between that guy and like Satoshi that kind of made it seem like he was logging out and logging into multiple accounts and kind of screwed up a little bit. Okay, cool. Like, really random theory, right? But the thing that I found so compelling about it was when they confronted the Blockstream guys with their theory, the way they reacted seemed so suspicious to me. It wasn't just like, okay, that's a funny theory, but here's why I think that's silly and things like that. No, they became very upset. They were very upset. And like, just that alone makes that theory so compelling to me. Probably wrong, like in probability, like if I was placing a bet, a lifetime bet, like who Satoshi was, right, and I'm betting on them, I'm probably gonna lose. I just think, you know, like the person with the opportunity and the experience and everything is probably not that guy. But just that reaction was just so compelling to me. I think that's my guess of who Satoshi is. How do you mark key levels without the volume profile? By using things that actually matter to where flows will come in. So here's a question. Why is it that if there was a lot of trade, well, how should I approach this? Why, when there's a volume profile level, okay, like, I don't know which ones you care about, but let's say point of control. Like one of the key strategies is like, if we open outside of yesterday's value area and then we enter it again, and we've been in there for more than 20 minutes, then there's a very high probability that we're going to touch the previous day's point of control. And a lot of trades that people take are based on the premise that we will see the previous day's point of control. What do you think that level means? Why do you think that the market would go back to that level? What is it about that level that makes it key? What's the theory behind it, you know? I think people have different ideas about it. That's why I ask. Because it's not accepted in the previous balance area? So wait. You're saying, or are you saying, are you talking more about like a value area high and low? So it wasn't accepted before, and ergo Okay, so your theory is, let me see if I can get my pen out here. Oh dear, hold on. Oh, I forgot. I always forget the key binding. Hold on a second. Oh no, wait, that doesn't make sense either though. All right, well, I just have to use the tablet's not working. Okay, so you're saying we have a volume profile and we have the value area high and the value area low, and we've moved like you know, since yesterday we've moved up to here. And you're saying because it rejected it yesterday, it's going to reject it today? For instance? Or because it's rejected it yesterday, it's going to return back to the area that the most volume traded? Yeah. But the thing that I want to understand is, going back here, why do you think that the most volume traded here, this point of control, what do you think that means? No, auction market theory has been disproven. And I'm trying to show you why. But and that's the key question, right? Why is the point of control the point of control? So one thing I will tell you, I was just saying this at the beginning of the stream, it's kind of funny. Especially when you look at the S&P 500, the point of control is almost always on the close. So do you see here? Here's the close. Here's the point of control. Here's the close. Well, oh, nope, that's not the close. Let's see. Here's the close. Here's the point of control. Here's the close. Here's the point of control. The majority of the volume at the NYSE happens in the closing auction, because they have this whole system for the closing auction that creates a lot of liquidities. Big players know that they can make big moves then, right? So the majority of the volume happens at the close. Ergo, the point of control is almost always at the close in the S&P 500. Okay, but if we were to just like cut that out, like say, okay, we'll do a volume profile, but we won't include the last 30 minutes of trading. So we can see outside of the opening and closing auction, where was the majority of the volume? Why did the majority, or not the majority, but why was that price the price with the most volume? And what does that mean? Or if we say like there's a value area high and the value area low, well, okay, we can take it from that side. You say the reason it's a value area low is because it was rejected, right? In other words, people weren't really interested in it in that direction, so I had to come back. I don't think that that's actually what happens. Here's what happens. When we're trading, we have to have liquidity to trade into. We're a market. If we're a really big player, okay, they can use some limit orders, but generally speaking, about half of it has to be market orders, right? And you'd sit down and say, well, yeah, but there's 8,000 contracts there in the 10-year treasury. Like that's insane amounts of liquidity. Yeah, but did you know that the block traders at like Goldman and JP Morgan, that their average size like trade in an instrument like that is 50,000 to 100,000 contracts? I'm not even kidding. I'm not even kidding. So if you're going to come in and you're going to buy 50,000 contracts in the 10-year treasury, guess what? It's going to move, isn't it? It's going to move. What if there's nobody to trade into? So what will happen is you move it up a little bit, right? And then the market maker goes, oh, wait, something's happening. Like somebody must know something for them to be buying that much. So I don't want to provide liquidity. I'm scared of providing liquidity now. I don't want them to keep pushing it through me and pushing my basis up, and I'm losing money, right? So the market maker doesn't provide as much liquidity there. So it goes from, like 5,000 contracts to what you got right there, where they can't even get 1,000 contracts at 05.5. And if they tick back up, you might see that they're only putting 500 contracts on the bid. And it will just go back and forth like that. So what has happened is the liquidity has declined. So if you're buying, you can buy across that price really easily. And you can't do it very quickly, but it will stay there for a really long time. So you can actually buy more in that area than you can anywhere else. And if somebody did come in and decided all of a sudden to buy a lot, guess what? There's more liquidity over here. So it's hard to get through that liquidity, comes back. It's hard to get through that liquidity, comes back. So you get this hole. Let me explain it this way. Let's say that every 5 minutes, we're all going to submit our limit orders and then they get matched up. This is called a Walrasian. I forget the correct way to say it. A Walrasian auction. This is actually how the Taiwan stock market works. Okay, you can only submit limit orders, and at a preset time, those get matched up. So there's going to be people that want to buy, right? And there's going to be people that want to sell, right? And you get these two kind of distributions. And this area in between are the people that actually got filled, right? Okay. So now, Walrasian. And that doesn't quite fit. Somebody that knew what they were talking about said it once, and I was like, oh, of course. Anyways. Okay, so those were the orders that were submitted. So what's going to happen next time? What's going to happen next time is there's going to be a hole here, right? So if all of the people that didn't get filled keep their orders for the next time around, right? You're going to get something like this, right? Oh, Satoshi. I say Satoshi wrong. I'm sorry. Okay. There's this hole, right? So price can move very easily here. But if they come up here, there's too much liquidity. They can go. If they go down here, there's too much liquidity. They get stuck. And so they spend so much time trading here. That becomes the point of control for that area, that distribution. You can see it. Remember, I was saying they're kind of going back and forth at 05.5. A little bit. They're doing it at 06 as well. And what are the point of control? Those two prices. Okay. So people mistakenly believe, and auction theory in particular says, this price matters because that's the price that they've agreed on. They're trading a lot of it there because that means that they agree on that price. That makes no sense. Think about that. Why you trade a ton when you think that the price is fair? What? How does it make sense? No, you want to buy a lot when the price is not fair, right? Like if we're going down, right? And then all of a sudden somebody really, really wants to buy it here. Like they really, really want to buy it. and it pushes it right back up, right? And it's you know, like if I'm looking at the volume thing, and then all of a sudden it's like, right, like tons of volume, like they really, okay, then that would make sense. Oh, they really like it. They think that the price is low. They're really buying a lot of it, right? That's never what happens. It's never what happens. Why is that? Because these guys, they trade so big. Their primary goal is to just affect the market as little as possible. And they know that they can't really control whether other people are buying or selling and whether it's going to go up or down. But they've made a decision that they have to buy it that day. And they're going to buy it with affecting the market as little as possible. And so that point of control area, all that means is the market makers got a little bit touchy there and pulled their liquidity. And so it started trading there for a long time. In other words, the point of control is random. It just happened to happen there. And what we find, by the way, with that Walrasian auction, like you get that hole, is that on average, it takes about 45 minutes for a hole like that to fill. Okay. So that's why what you will tend to see, especially in the treasuries, is it go up, then it will just go sideways in this area for about 45 minutes. And then if they really need more, then it will make another move. And these will be like 10 minutes and these will be 45. Because it's the 2.5 rule. Right? Sorry, this will actually be 10 to 20 minutes. Right? So basically, this hole lasts about 2.5 times this. There's research about this. Okay, you go look up. I forget the. Well, there's a Walrasian auction in a continuous double side auction. It's where they talk about that distribution thing that I was talking about, right? Anyways, that's why it happens. Okay. So the whole basis behind auction theory is wrong, because auction theory is basically the reason that they trade so much there is because that represents true value. And then if something changes, then they're going to move up. And if they move up and it really has changed, then they will accept a new true value. And if not, it will get rejected and it'll come back to the previous true value. But that's not what is actually happening. What's actually happening is the volume profile is just mapping out the liquidity for you. It's showing you places where there was low resting liquidity. And then these moves that happen up and down are people, really, really large players that are buying up a ton of it. And it could be for many different reasons. It could be because there was a big economic change. Like yesterday, a big part of it was that the JOLTS number was bad. Another big part of it was that Anthropic released a new version of Claude. And so there was people's perceptions of what things are worth changed. And so they bought a bunch of treasuries and it moved up because of it, right? And what happens is it doesn't go up until they reach a new true value. It goes up until they've bought the number of contracts that they want. Otherwise, how do you get this thing where it's like it goes down and then it distributes at the end of the day, and then the next day they take it down even further? What changed? Like, why didn't they just take it all the way down to the correct value in the first day? It's because it takes time to trade that much volume. So yeah, so there are some useful kind of things like auction theory was kind of looking at real data and trying to come up with a theory to explain what the data was doing. But as we became more sophisticated and learned more about the markets, like the story that we were making up about why it did that turns out to be completely wrong. And if you're basing everything that you do based off of that, you're going to make big mistakes. like coming in and saying, well, they've come here, that represents fair value, when there's more volume to trade. What matters is are people going to buy or sell, right? If there's aggressive buyers, it'll move up. If there's aggressive sellers, it will move down. So what we do, so we come in and we say, here are all of the things that we know could come through today. Well, it's a Friday, so some people have to balance their positions for the weekend. Okay. There's probably some leftover from the trade of yesterday. Okay. There's these market makers that have options positions on. There is stuff that happens at the beginning and end of the month. I don't know, on a Friday, I don't have a ton of them. Okay. But we have all of these things. And then you can come in and you can say, this is going to be a net change of X contracts. This is going to be a net change of X contracts. And then you add them together. And if those, if these were all like, this is negative 10K, and this is negative 10K, and this is negative 10K, and this is negative 10K, which every once in a while does happen. Maybe like twice a year it'll happen, right? So it's like a net 40 to 50K down. Then I'm going to come in here and I'm going to say, they're going to net sell this 40 to 50,000 contracts. And then I'm going to come over to my, this chart right here. And I'm going to look at my cumulative delta. And I'm going to say, I want to see a net 50,000 contract sell. Okay, well, in this case, there was a net buying of 35,000 contracts that they were able to trade in this liquidity hole that we have right here at 06. Right, and that's how we trade it. Now, in terms of levels, for the most part, we don't care. But we have found some levels that the market does seem to care about. Okay. One of them, and you can see it right here, is the market maker's average position. So you can come in and you can just assume, like, what if all limit orders were performed by the same trader, owned by the same market maker? And then we also assume that, like, it's going down and he's taking fills, so he's buying it the whole way. Anytime that he gets filled on the offer, he can get filled on the offer, he's doing it. And he's making money on getting filled on the offer, right? So if we assume those two things, what is his current average price? That's what that is. We call this the cost basis. This is not a common thing. I have a NinjaTrader indicator that you can get at speculatorsat.com that does it. I just explained to you how I calculate it, but calculating it is really complicated, actually. But you can see right there that, like, if they come back to it, the market tends to react. Now, sometimes they will go right through and they'll go to this one and then they'll bounce. But the amount of times that you will see them hard bounce off of that line is just eerie sometimes. Okay. And why is that? Now, the time when that matters is going to be time more like right now, when we don't really have something really clearly moving the markets, somebody really clearly coming in and pushing things, right? Like, if there's a change and these guys are really, really buying a ton, then they're just going to blow right through those lines, okay? But when it's a time when, like, there's not a whole lot going on and we expect the market maker to be in charge and be really powerful, then that indicator tends to be really useful. It's called the inventory cost basis. So if you come over to speculators, if you're using NinjaTrader, I also have one for Sierra charts, by the way. It was beta, but I can give it to you if you want. You go to speculatorsat.com and then free downloads. And then there's my Elite Indicator Suite, which includes a free 2-week trial. So as soon as you install it, it registers with NinjaTrader's servers, and starts the trial. So then after you install it, it works for 2 weeks. And then after that, you have to pay $200 one time. You can buy it one time here. Here's where you buy it. Cool. Inventory cost basis is the name of it. Inventory cost basis. Cool. Okay. The next one that we found is kind of valuable is volatility. So what we can do is we can come in and we can say, what is the volatility of this instrument as priced by the current at the money options? So right now, today, when we measured it, it was 8.19%. What that means is that based on the current price of the options, they're basically saying that this instrument will move 8% in a year. Okay. And what we do is we divide that by the square root of the number of days in the year to take that into a daily time. It's why that happens. It's complicated. It's a statistical thing, but basically we convert it to a daily volatility level, and then we say, okay, so how far are they pricing that it's going to move? And we kind of say, okay, they're pricing that it's going to move this much, right? So we're assuming that the open is in the middle, right? And we take one, and then there's the other situation where the open is the high and this is the low, right? So then, and these locations tend to be pretty good. Like the frequency with which they will bounce on those is pretty wild. By the way, why did this one pick up 502? We need to come and fix it a little bit. I have a bug in this one, so we're still working on it a little bit. But if I come back to this one, reload. Yeah. Oh, it's because I'm not looking at ZB. I'm like, we want this one. Although it is still a little jacked up. 6.4. Oh, why would it? Let's see if that fixes it. What was the last position we took? Oh, we did one on yesterday, actually. We took one long here, and I bailed on it really quickly, and then I have to leave at 8 o'clock, but it did eventually go, didn't it? That jump right there was news, so I wouldn't have held anything through the news, but basically, I don't remember what we did yesterday anymore. Oh, that's right. It was a short. It was a short, and it didn't play through. No, that doesn't look like right either. I'm really bothered. I'm sorry. I'm sitting here thinking through, why is it not loading that correctly? I did write it correct. Reload. See, it shouldn't do that if it already has one. I don't know why it's doing that. This shouldn't be 5.02. So the lines that you're getting are wrong. Otherwise, you would see it where it's like, yeah, they come to that line and they bounce off of it really frequently. So basically, the options market makers and all of that sort of stuff, they kind of care about those levels. So we found that projecting the volatility for the day tends to be a useful level to look at. I would also cite like daily highs and lows. I don't find that to be like a good trade, but the market definitely does interesting things when you get to those levels. And then I would also look at things like 50, 100, 200-day moving average, 50-day high and low. So if you get a new 50-day high, you tend to see momentum traders come in. That doesn't necessarily predict that it's going to go up or down. You still have to do your analysis of like what are all of the flows and all that sort of a thing. But one of those, when that happens, one of the flows that comes in is momentum traders. So that's another one to look at. But it's really not levels. Like that's the thing, like there's a larger thing that I'm trying to tell you. The really, really big traders, they don't have the luxury of sitting down and saying, if it gets to 102.07, then I want to buy or sell it. Right? And because for you can buy or sell it all right there. Right? You just one order and you're in, right? If they're gonna buy it, it's gonna be over a whole range and it's gonna move things, right? So some of the biggest guys, and I'm not saying that they're all like that, but some of the biggest guys, like an index fund, for instance, they don't care what the price is. They have to buy it because their portfolio strategy says we have to rebalance our portfolio at the end of the quarter. And so they have to sell their winners and buy their losers, and right? It's going to move it regardless. So putting a huge emphasis on I'm waiting for a certain price to get hit and then I'm triggered into a trade doesn't really make a whole lot of sense. But what does make sense is if you know that there's this large player out there that's likely to buy today and you can buy before them, and then you just kind of watch the volume and know when they're done. Wow, look at that. Somebody really hit that. It's some action on the open, so... So I'm not sure if treasuries would be great for a personal account because you don't need the liquidity. Well, but that's probably because when you get started, you often think, well, what's the thing that I can make the most money on, right? Like retail traders always are attracted to the most volatile instrument. And the problem is the volatility works both ways, right? So that's not necessarily a reason to trade something. I suppose that something being active, that certainly helps your trading. But the most important thing is can I predict future order flows? Can I actually predict what these guys are going to do? If they're going to buy a ton or sell a ton, right? That's what makes the treasuries one of the best instruments for retail traders to trade, because the guys that have to do things in the treasuries, it's very consistent. It's very consistent. Like they have to do that. It's their business. They don't do it, they're in trouble, sort of a thing. And on top of that, because it's so thick, it moves a little bit more slowly, so you get time to sit and think about your trades. You know, over here in NQ, if you're not lightning fast and you just miss it here in the treasuries, you know, it's like, I know that it's going to be a trend up day and it gives me all day to get in, right? And there's all sorts of talk and discussion about what the Federal Reserve is doing and all of those sorts of things for you to, get the information that you need to predict those order flows. You know that there's actually some studies that show that the thicker an instrument is, the more predictive signals they are able to find. Because what it really means is thick instrument, more big players that trade it, which means more consistent big trades that happen every or whatever the regular basis is. Like I think that the best example of this is portfolio rebalancing, right? So there's more people coming into the 10-year treasury that are rebalancing their portfolio than there is, say, oil. And so that's one flow that you can incorporate into your model. So that's what makes it useful. And then, well, you're trading a less volatile instrument. So if I just come in and I'm just doing one contract, it's kind of okay, I made $15 today, cool. Right? For most people that's not enough. But if you scale up and you get good at it, it can add up, sure. Not that I'm saying that you're going to become a successful day trader. You know, the idea that most people have in their head about, oh my gosh, this just reminds me. So yesterday, I came across this account. I'm kind of wondering if maybe I'd seen them before, but it looked like a relatively new account on TikTok. That like their history wasn't very long, and not very many of their videos had really taken off. Although they did better than my late videos as of late on TikTok, at least. And her whole thing was basically like people get taken advantage of, get suckered into day trading, and you just shouldn't do it. Which I think, generally speaking, is true. Man, the dollar's really getting hammered here. Generally speaking, most people shouldn't day trade. Right? Like I come in, I've been doing this every day for almost 10 years now. I think we're at 8 years that we've been doing this stream. I have a lot of resources that average person isn't going to have because I run a YouTube channel. So I got all of these people constantly messaging me with information, things that they've found, want to know my opinion on. But I'm able to have a News Squawk. I have a lifetime subscription to the News Squawk that we got when that first, when Financial Juice first came out. I have a affiliate link in the description, although I don't think you can buy a lifetime license right now. I can program, so I can build my own indicators based off of the things that we've done. I read the research. I'm talk to researchers and things like I have a lot of advantages a regular person doesn't have, right? So just because I do it doesn't mean that like most people should do it. But this lady, she was saying like, oh, it's particularly devastating for middle-class families because middle-class families can't absorb a $10,000 or $100,000 loss. And I'm like, what the F? Your husband blew hundreds of thousands of dollars? Honey, it does. His problem was not day trading. That is just a degenerate. Holy crap. Holy crap. Where did he get the money? Did he go to the bank and just take out a massive loan? Oh, so cool. Like you have to be uniquely stupid and or psychopathic to be taking a loss equal to like your yearly salary. Yeah, 16 years of training, I haven't come even close. Like the largest single day loss I've ever taken is $500. Like, how is this guy? How are you married to a guy that's losing tens of thousands, if not hundreds of thousands of dollars? Yes. And I think her problem is that she's upset that like he was doing this and she had no clue. You're an idiot if you've gone that far and you're not rich. Oh, that, yeah. I mean, like, maybe he took out a bank loan and traded the bank loan or something like that's just crazy. Crazy. Yeah, do you think that the dollar reverses here? I think that we got a good chance. Although for the regular, so there you notice that there's two lines. One line is based on the open of the extended session, and one line is based on the open of the regular session. So we are at plus 2 sigma on the extended session, but there's still another leg lower based on the regular session. And I haven't been able to sort out, you know, is there some scheme between which one matters more? I only know that it'll bounce off of one of them. But given where we're at right now, I definitely think that there's reason to be looking for bounce here. They went and made a loss porn. They went and made loss porn a thing to encourage more degenerate imbeciles. That's part of it. It's cool and funny now instead of shameful, like internal feelings for. I don't know about that. You know, on Reddit in the past month, although I haven't, I mean, maybe I need to go and browse them harder. I haven't been doing too much Reddit browsing lately because, you know, I was going through like the beginning stages of work, and now I've gotten to the point where I've taken on enough projects that I know what's going on in those, and I have ownership, so I can work pretty hard all day. But there was a time there where, like, all of the sudden, all of the posts that I was seeing on Reddit were negative. Just all of them were negative. And all of the comments were really somber too. Like, that's super sad that you did that. You shouldn't be trading these sorts of things. So, yeah, it's wild. It's wild. And I have seen things that are pretty, you know, like, man, what are you thinking? Like situations where people have lost tens of thousands of dollars. Usually it's like, I received this inheritance and I gambled it all away, right? But too many people want to get rich before proving they have a profitable system. Oh, it's not just that though, man. Like, the chances of so like the kind of performance that a retail trader wants to see is not practical, right? Like the dream for day trading is that you're going to come in, you're going to spend all day just watching the markets, and then that's going to pay all your expenses for the month. Okay? So like making $100,000 consistently, let's not do $100,000. Let's say that they make $120,000 a year. Okay. So you make $10,000 a month. So consistently making $10,000 a month to like consistently do that, you have to have a massive wad to be trading, right? Like if you have $10 million and you're just trading euro dollar and you're doing something that's practically risk-free and you're getting the risk-free rate of return, then the risk-free rate of return is enough for you to live on, then it works, right? But some of the things that people are trying to do, like that the idea that you're going to make $10,000 every month is really quite crazy. And what are you going to do when you make $5,000 and that doesn't cover all of your expenses? You're screwed. And how are you going to find that? Like, living off of it is not practical. The kind of performance that you can get as a retail trader is just not that consistent. Like the edges that we can get is really, really small. And to be frank with you, for most people, it's not worth it. I mean, even for me, it's not worth it. Like if I were to look at the amount of time that I invest into this versus the amount of money that I actually get out, even when we're just looking at like my best times, it's not worth it. I would probably make more putting that time into almost anything else. So it's just I have to, because people have this idea that, well, if you have to work until you get the profitable system, and then when you have a profitable system, then you're golden. And actually, no. Actually, no. The reason that happens, the reason why people say that, is because what you can do is you can come in and you can say, I just want to make a tick, and I'm going to hold like a 10 tick stop to try and get it, right? And if you do that, like the chances of them coming back across your price is like really, really high, and you're going to have like a 90% win rate, and you can get away with that for like a year or two before like the really bad day comes and then they blow up. And so you'll get when this happens, the kind of person, I'm getting into something that is a little icky, but it's like one of my biggest like pet peeves triggering things right now is that why do we get into trading in the first place? Most people get into trading in the first place because society holds the market in such high regard that if you were to defeat the market, you were able to figure it out and make money where everybody else has failed. That really proves your value to society. You're one of the most valuable people in society because we place so much value on the market. Once you realize that most of what's going on here is random, and that the market is not some all-knowing God that makes the correct decisions about the economy all times, but is actually just people buying and selling, and it's just an inanimate thing, and it being successful at trading it doesn't necessarily speak well of you, kind of destroys the whole illusion. But most retail traders never get to that, never understand the market enough to understand why their whole reason for getting into it is probably bullshit, right? So the guys that they get into it for that reason, and then they think that they've had success because they've been going for like 3 or 6 months without having like a big loss, it goes straight to their head, man. It goes straight to their head. And these end up being some of the most aggressive, pompous, arrogant people you will ever meet. And then they go on Reddit and they argue with everybody that, because they think that they have it figured out. And then when they blow up, which is probably a lot of them are blowing up right now, these are the kind of events that happen that cause it, then they quietly disappear and you never hear it. You don't need to watch charts all day. Some days if you hit... I know I've seen a lot of people that they want to sit all day. I don't. Like, I could not stream all day to sit and talk the whole time. I guess if I was playing a game and there was lots of periods where people didn't care if I was talking. But these big streamers that are streaming like 8 hours a day, holy crap. Wow. That's nuts out to me. How do they stream for that long? And trading, like coming in and being focused the whole time, looking for some, especially these chart traders, they're looking for a specific chart pattern and everything, and you're going to sit there for 8 hours? What a life. Oh my gosh. Why would you want to do that? It's really quite stunning to me. I think the thing that bothers me the most is when you get like kids, like they're still a teenager, or maybe they just graduated from high school, and they're like, I don't think that university is for me. I'm going to become rich from being a day trader. No, at worst, you will regret that decision for the rest of your life. You will have no skills. You will have nothing. You will die a loser. That's what tends to happen. It's just, it's a nutso thing to say. And I see that almost every day. People come, listen, if you're a kid and you want to day trade, like this really gets you going. Well, first of all, you understand that it's really the thrill of making or losing money that's getting to you. You don't actually like trading. You like the feeling of making and losing money. Okay. But if you really do truly love day trading, you understand what's really involved in it. And those are things that you enjoy. Like you enjoy reading the news. You enjoy doing financial analysis. Right? Okay. Then what you should do is you should go and get into the nicest university that you can and get a finance or a quantitative finance or statistics math degree and go and work for like Jane Street, right? That's the person that's actually successful doing this stuff. That's what they do. And those of us that are like retail traders, we're doing it because we fucked up somewhere along the way, right? Like for me, I didn't realize that this was something that was interesting to me until I was basically graduating. So I would have loved to have gone back and tried to just be a trader right out the gate. I tried to, you know, get into technology at a bank, and then maybe they would let me transition over to trading. There are some people that have done that. But then what happened was there was this guy in London called the London Whale that did that. And because he knew so much about their back-end systems, he was able to bypass all of their risk controls. So after that, they don't let the geeks trade. They don't let you do that. It's too much of a risk for them. And so that's why that's my excuse for why I'm a loser retail day trader. Right? But it's okay because I'm a really, really skilled programmer and I'm really, really good at it. And I make a lot of money doing that. Yeah. You don't need to be all in on trading. It can always be a side hobby. Exactly. Because there is, if it's a side hobby, especially if you're doing it with stocks, there is always that chance that you really do hit a big one. And by the way, if you hit the big one, don't just go, okay, now I've got the big one. Now I'm going to continue risking just as much on that new bigger wad. And you'll blow it. You'll blow it. Most retail traders, day traders, have to take on more risk than they probably should. If you get bigger, keep your size small so that you're taking less risk overall. I don't know. Happened to a lot of crypto buyers, I'm sure. Yeah. I'm still bothered. I'm going to take this. I'm going to try one more time here. When I look at this output, I don't know what's going on here. Oh, there's grandma. When I refresh, so it's really like over here, 502. It shouldn't be that. And if I refresh and it comes back, it says that it scraped the volatility. So it shouldn't have done that. Export levels happens there. That's why it happens. It's basically always getting today's day and putting it in. But then I don't know why these ones it's not loading them correctly. There's something that it's not loading the values correctly. Anyways, my wife has been on a work trip. She has to do training like once or twice a year. So I'm gonna leave a little bit early. Hope you know, I was when who was it? Was it GRD? I don't even know how you're supposed to say that. Oh, actually it was the guy that was asking about volume profile. I'm like, he's not gonna stick around. I don't think he did. It's okay. Yeah. That's one of the things. We need to make a video that's basically like all of the nonsense things that people tend to say about volume profile and stuff like that. Because I'm a little bothered when I'm trying to share empirical information about order flow, and I'm put into the same bucket as like these volume profile people and stuff. But is what it is. Well, so the S&P 500 had a pretty good open. I wonder, since I've been yapping here, well, the Amazon is still down 9%. I'm not quite sure what the buy on the open was. Might just be random. Don't see a headline for that. But when that happened, the treasuries definitely took a dive, didn't they? I think there's validity. Well, I mean, the whole thing is, go and watch my video about improving volume profile, because I think that's the best explanation of it that I could give. Because the thing is people are seeing something real in volume profile. It's just that, number one, the story that they've concocted about what it means is not true. It's just objectively based on the empirical information that we have now. It's not true. And two, I've never seen a proven edge with it. It was actually Delta Trend, who I am so jealous of, because he's doing back testing of a lot of things that I've like, oh, we would like to back test this, and we'd like to back test this, and we just haven't had the time. And he's got the time, and he's got a little bit more knowledge than I do on some of these things. He was showing, he was on a volume profile, and he was using splines to, you know, find where the local minimums and maximums were and stuff like that, and then doing a back testing off of it. Then adding machine learning on top of it and everything, but that the risk adjusted returns on it were really terrible. And he only had a year of data. He needs a Delta Trend. You need to come and talk to me, because I've got like all orders in the S&P 500 from like 2022 going back to like 2016 or something like that. I haven't looked at it in a while, but I could let you back test it further. But wasn't a very good system. So this is the other thing, is that there's just like there's interesting things about the volume profile, but the things that we can prove are not necessarily things that give you an edge. So anyways, I said I was going to go. I'm going to go. See you guys on Monday. In the meantime, stay excellent, team.